Hi there. I'd like to provide you with an update on what's been going on in the Toronto residential resale market for the month of February. Typically, real estate markets are shaped by local factors such as employment, supply, and affordability. However, in February, political uncertainty had a much more significant impact on Toronto's residential resale market. The threat of U.S. tariffs on Canadian goods, coupled with the retaliatory measures from Canada, created economic fear, stalling buyer and seller activity. Economists weighed in, warning that tariffs, potentially as high as 25% on Canadian goods and products, would devastate the Canadian economy, resulting in massive job losses, inflation, and significant declines in Canada's gross domestic product. News of those potential tariffs, mostly based on speculation, dominated the news channels, with President Trump personally promoting the agenda. The end result was fear and uncertainty, which immobilized buyers and sellers in Toronto and the surrounding areas. Only 4,037 properties were sold, a 27% decline from last February's 5,562 sales. Unlike past years, February sales barely outpaced January's, rising just 5% compared to the usual 30% increase. Sales volume actually mirrored levels last seen in 1996, when the average sales price was just over 200,000. But the average sale price is holding at $1,084,000, just down 2.2% year over year. But even in flat markets, sales in February typically see a significant increase compared to January. These numbers include condominium apartment sales, the least expensive housing type, which still accounted for 30% of all reported sales. The average sale price for all condominium apartments in February was 688,000, slightly higher at 724,000 for sales in the central core. The market in the 905 region was hit harder than in the city of Toronto. Sales in the 905 dropped nearly 30%, with average prices falling 4.4%, while Toronto's sales declined 22%, but prices rose 2.3%. Inventory levels rose with 12,066 new listings, 5.4% higher than last year, and a total of active listings surging 76% to 19,536. However, nearly 40% of these are relisted properties that failed to sell due to high prices. The day before this report came out, the U.S. formally announced tariffs, 25% on most goods and 10% on energy, triggering strong Canadian countermeasures. While the initial reaction was negative, confidence is slowly returning, and early March data suggests market activity is picking up. With mortgage rates declining and pent-up demand for housing, Toronto's resale market is poised to rebound as uncertainty fades. Early March indicators report that this may already be happening. If you have any questions, please reach out.